Hey guys, welcome to another Trade Genius podcast. Philip and Bob Kudla here, and we are going to dive into the Bitcoin miners, why it's important to understand what's going on with them, and why they have a huge upside potential going into next year. But there's some things that we got to address first, so let's dive into this video.
Trade Genius.
So Bob, my take is that miners, I think in the long haul are a really good investment, but there's some issues that come along with these bear markets, these crypto winters. And I know that you've been big on Mara, and I agree, Mara's best of breed. What's your take on it at this point in the bear market cycle?
Yeah, I mean, look, Mara is my proxy for Bitcoin in the stock market. So they're leveraged to any great opportunities for Bitcoin price growth, and they're also the canary in the coal mine for any kind of a weakness in Bitcoin pricing. And my view on this is I know people can argue with us in the comments, but I think Mara is best of breed as the miners go. I think they're well capitalized. They have a lot of new technology. They got a lot of fresh technology. They got a lot of computing power. I think their cost of mining is excellent. And you look at that against Riot and against some of these other ones, I think they're best position. However, what we're trying to figure out now is the nuclear winter of Bitcoin runway, long enough for the airplane to land. And so I think that's really the purpose of our conversation today, is that in these situations, it's he who survives thrives. And I think we should get into some of the numbers here to see if that is indeed the case. And if not the case, who benefits from that? And if it is the case, obviously Mara is going to come out the other side. And just for point of transparency, is that I shorted Mara from $9 down to $6, but I also flipped and I bought Mara again at $6. So I trade it, and until Phil and just people listening to this, Phil's really my crypto partner with Trade Genius. So when he waves the flag that we're out of this bear market, then I'll go ahead and I'll buy Leap, some Mara. I'll go out as far as to let me go on option, buy in the money, and just let it sit and run. But in the meantime, you can make a lot of money during this time of confusion, and that's why people always ask me, guys are so calm about this. There's tremendous opportunities to trade in this volatility. And volatility is your friend, and there's leverage products within the stock market. And Phil, can always address some of the leverage products that are in the Bitcoin market. However, I think people are learning the risk of crypto leverage right now. So Phil, with that, I'm going to pass it back to you. Maybe you can throw some of these slides up. We can talk about them.
Yeah. So this slide here is basically their balance sheet, and on the asset side, so they were cash rich in Q1, they were Bitcoin rich in Q1, but as you notice, each quarter we're stepping down in their holdings, and as of Q3, the last earnings report that we got, they were down to 55 million in cash. That was down from about 120 to start the year on Q1. Down to 55 million in cash, and then they're down a little bit more in Bitcoin as well. They had 135 million in Bitcoin. They're down to 126 million. The other thing that's going on is the operating, the mining net profit margin went negative in Q3. Now, some of that was a situational thing. They were winding down some activity in facilities, so we'll have to see what happens in Q4. But keep in mind, these numbers for Mara's best in breed. Everybody else is struggling too, right? So this is probably your best picture for this entire sector. But you can see where it's really a struggle, and like Bob said, you have to get through this time, because you have a mixture of things. You have big players such as Mara and Riot bringing on a lot of capacity, because that was in their pipeline, their schedule to do that. I don't think anybody thought that Bitcoin was going to pull back as deep as it has, and so that wreaks havoc with some of these infrastructure schedules that they have. So they're bringing in all this infrastructure, bringing out more hash power online, but it's actually working against them because the difficulty is not dropping, and so it's not lowering the cost to mine Bitcoin. So that's a little bit of the trap that you can get into in these bear markets. So, and you're seeing that reflected here in Q3, where it's minus 8%. The next slide here is going to be something else that comes into play with these miners. So it's not just about machines and electrical costs. It's also about what are they doing with their debt? And they had a pretty decent debt to equity ratio in Q1. Like things were looking pretty good. But as we progress through this year, now, they have a negative debt to equity ratio as far as the debt's now about 200 million higher than their equity. And so that's an issue because they have this $100 million revolving line of credit with Silvergate. And so when we talk about the banks trying to steal Bitcoin, I mean, it's kind of a cheeky title, but in reality, what happens is that if these guys can't service this loan, then yeah, Silvergate does end up with Bitcoin because that's collateralizing this revolving line of credit. And there's actually some stipulations that go along with that. And it's kind of interesting. And again, these are kind of like the devil in the details when it comes to these miners. One is that they have to maintain the LTV ratio or loan to value. So that's where, like, when you buy a house, you have to put out a deposit, right? A down payment. And, sometimes that can be upwards of 25 to 35% depending on your loan terms. Similar thing here with these loans. If any time the LTV ratio exceeds 75%, then the company must bring the rate of advance to the minimum advance rate. So basically they have to add more BTC as collateral. They also have to maintain an adjusted net worth of 350 million and minimum liquidity of 25 million. So if they don't have enough of that in the bank to satisfy Silvergate can call the loan technically. And that's where this becomes an issue, because usually miners rely on their Bitcoin stack as kind of like the war chest to get through these times. And there's been other companies more recently that have had to, in a similar situation, have had to give up their entire stack. And it puts them in a precarious situation because they lose that cushion. And if you notice on this next slide, it talks about how 82% of the entire Bitcoin stack is now committed to this $100 million loan. And then if Bitcoin drops below 14,000, which is extremely plausible given the situation with, we showed you guys how we might be facing a recession, probably are facing a recession. Don't think Bitcoin's going to be, resilient against that to the point where it doesn't drop more. It certainly could come down to that level at this point going into 2023. So that means the rest of their stack goes to collateralize that loan. Okay, now they're now their war chest is empty. And then the last thing that they have would be what they've been doing is that they've been diluting shares and offering more shares to try and drum up capital. That's been working. But do you think that's going to work very well in 2023 at the bottom of the bear market? Probably not. So although we think that like Mara's like a super good play, and I'm very bullish on them if they're around by Q4 of 2023, then they've made it. And because I think any miner that's made it into Q4 is set going into 2024 and beyond into that halving, because that halving with the reduction in daily output, the price is just going to go up. It's just a simple supply and demand metric for Bitcoin. And that's the key to these guys. And then the long-term goal is what everybody's trying to push for, is being a miner when all of the Bitcoin on the exchanges is gone. That's the new diamond cartel, because they're the only ones that are going to be able to control that supply. And you're not going to get Bitcoin on exchanges. You're going to have to go through some OTC, over-the-counter intermediary, to even negotiate a price for Bitcoin. And that's why the price goes parabolic, okay? Because they'll ultimately control what the price of Bitcoin is. And demand's not going to diminish because hardly anybody in the global population really has Bitcoin. So that asset hasn't really even reached its parabolic growth phase yet. So this is why miners are going to be very profitable going forward and very valuable in your portfolio. But you have to get through this area here, this next 12 months. And you can see like all of the pitfalls that not only Mara too, like all these other ones, all these like Hut 8 and Riot, they're all susceptible to this. So that's all I wanted to point out on this particular situation with these guys, is that great play, but watch, be careful and mindful, and maybe Q4 will have more clarity in them.
Yeah, hey Phil, I want to add a few more points if you don't mind.
Sure.
I want to talk about, we talked about, Silvergate kind of joked that the bank's going to steal the Bitcoin. It's an age-old trick. Banks lend you money, and they figure they can win either way, right? Either they get paid back with interest, or they're going to get a valuable asset that they're going to be able to sell later at a higher price. Now, everybody and their brother knows where MicroStrategy's at risk. Everybody and their brother knows where Mara's at risk. Everybody and their brother knows where Silvergate Bank's at risk if they're going to be picking up assets that are Bitcoin and not cash. And, we have, and we'll be talking about this more in the coming weeks, there are big American politically connected players coming into the exchange business. I don't think it was an accident that these things are all getting blown up, that the regulatory environment has been hostile. There's a reason why GBTC has not been given license to form an ETF, is because they're not in the club. And so you have now Fidelity coming out with a ETH and a Bitcoin ability to buy and sell, and then hold them as the custodian. And who doesn't trust Fidelity? I would trust Fidelity, right? And then you have some of the other banks. Schwab's talking about it now, I think in cahoots with a major bank like Chase or Citicorp. These things all now start getting FDIC or SIPC backing for the collateral being held by these banks. And so I wouldn't be surprised to see them trying to create an artificial break of support. What we call in the stock world, we call it a scare the children move, where it's really an artificial move. People say moves aren't artificial in the stock market. They absolutely always are. So when big money wants to buy something, price doesn't go up first. Price collapses first, because they're trying to scare the children out of their positions. And I think that's what's going to happen here. I think they're going to try to make a run to make Mara vulnerable, to basically to puke up their Bitcoin and some of these other miners. But also, too, can they make Silvergate puke up theirs? And can it make GBTC puke up theirs? So, it's going to be really interesting to watch. So that's why when Phil and I we're so kind of benign about, can it go to 13? Can it go to 10,000? Yeah. But once this money gets in the right hands, you remember what happened in the housing market in 2007, basically to 2009. It looked like nobody will ever own a home again. And by 2020, homes were double. So because the right people got to own the asset. And so it's going to be really interesting. But the next, I think, 9 to 12 months is going to be you're going to have to be on your toes. You can't hodl the miners here. Like, you can hodl your Bitcoin, but don't hodl the miners here, because I have a measured move, Phil, down to $1.75 on Mara. So we'll see if it bears out for us at that time. I don't think Mara is going to go bankrupt, because you just talked about diluting shares. If Bitcoin gets cheap enough, the Mara board will say dilute shares as hard as you have to, so you can buy Bitcoin cheap. Okay, even if Silvergate takes all their Bitcoin, you can go out there and say, I'm going to cut the value of my company by 300%, because I'm going to grab all the Bitcoin I can, because I know how valuable it's going to be. So it's going to be some really interesting chess going on with this, Phil. So I just wanted to share that little extra with your listeners.
Yeah, no, and that's the interesting. Mining is fascinating to me because of all of the different moving parts, and it really does become 4D chess, because you've got electricity, you've got hardware, and hardware goes, after a while, the hardware becomes obsolete. So you have this constant ratio on hardware relevancy, right? And then you can also hedge what you're making by shorting the futures if you're a big producer, which I don't think these guys did a very good job of hedging. If they had all gotten hedged toward the top of the markets on futures, they'd be sitting pretty. They'd be hundreds of millions of dollars in profit on their futures hedge, and negating the drop, But and it's tricky because you don't know that the market's at the top. But I mean, they should have done some ratio of that, and it looks like none of these guys did any of that. And I think some of the more savvy ones on this next go around probably will do some of that, at least on a percentage basis. But so there's all these moving parts, and that's why you never really know until the earnings reports come out how well they're managing all these moving parts. And it's not just, plug machines in and let's mine Bitcoin, and as long as Bitcoin stays above X dollars, we make money. There's other variables that I think people fail to grasp. So hopefully this video kind of gives you guys a better understanding of that. And that, I think really if we can get through Q3, Q4, and these guys are doing okay on earnings, then I think they're going to be awesome plays for not only the next couple of years, but I think beyond that, because I think we'll get into where the supply shock starts to come into play. And we're going to see this commodity, Bitcoin, go through something that I don't think anyone's ever seen in any markets in human history. So, and these guys are going to be along for the ride. So, hopefully you guys can take this information and benefit from that. And ultimately, I think these are going to be great plays for your portfolio.
Stay tuned for tomorrow. Really interesting video for you guys tomorrow. Something that actually Phil and I for a long time would really go back and forth on with each other, and we'll share our history on this, because I think it's probably the thing every people go through. So don't miss tomorrow's podcast. You'll love it.
Yeah. All right, guys, that's going to do it for this edition of the Trade Genius podcast. Hope you found it helpful. Please let us know your thoughts in the comments below, and please hit like and subscribe. It really helps us out, and we'll see you on tomorrow's video. Take care. Bye-bye.
Trade Genius.